You know how sometimes you know you need to do something in life, you need to apologize, you need to go see somebody or just do something that is uncomfortable, but you know it's the right thing, and it's difficult to do. It's the same thing with trading. You know, for example, that on this chart right here, I can see the pound Swiss. A lot of traders are buying the pound Swiss, so this isn't a downtrend. If I go to my pound Swiss chart, I'm going to see that it's actually popped. It's actually come up higher. And I know that it's likely to fall. There's likely to be a move down at some stage. It could be even this candle. This candle's not going to close for 416 minutes. It could be that this candle makes a long wick, and that could be in and of itself a great signal to sell. I don't know. There will be a signal to sell, but it's always the case that you will be paid the most by the markets when you have the least amount of confirmation or reason to believe that your trade idea is correct. And if you think about that, that makes a whole lot of sense. We actually use this principle in the Small Accounts, Big Profits course, where we're taking a small $1,000 account and growing it over 300 trades up to 100,000. That's the goal anyway. And you can learn more about that by clicking the link below this video. But this principle, this idea of taking what the market is offering you and running with it, even though you have no confirmation, even though you have very little to go on, those are always going to be the most powerful trading ideas that you can use. They're also the riskiest, and they pay off the most. And this is why I suspect when you look at these numbers, the open position ratios, you'll notice that most of the traders, most of the time, what they're doing is they're going against the strong moves. So, for example, if we go down here and we have a look at the Aussie Swiss, 83% of the traders in the Aussie Swiss are going long. They're buying the Aussie Swiss. And if I go over here to the Aussie Swiss, what am I going to see? I'm going to see that the market's been falling. And it's been falling for some time, actually. The longer I back this up, you can see that the bigger this downtrend has been. Sure, there's been some retraces against it, but what we're looking at here is basically a downtrending market. And it's really hard to argue against that. If you ever want to use, by the way, my favorite way to do this to see where the market is headed is you just get a kid under the age of 13, like a 12-year-old or a 9-year-old, and ask them, is the line going mostly up or mostly down, or mostly up and down? And they'll tell you where the trend's going, because sometimes it's hard for us to see it. But this is really an important principle. Take, and most of the traders here are doing this. Most of the traders here, you can see, they're trying to pick the bottom of the Aussie Swiss. And this is extremely difficult thing to do, especially when the moves upward are so limited. This is actually one of the biggest retracement moves we've seen. It's only 129 pips. Most of the time, you only get one or two candles here on these retracement moves, and then it re-engages in the trend. So the key to doing this, I believe, is to make sure that you watch what the other traders are doing, because we know that most of these traders are losing. We know that most of these traders are going against the trend. So all we really have to do is figure out, when are they all piled in on one side, and what do the charts look like? If the charts look like they're trending and the crowd is telling us that they're all trying to pick this bottom, then it's probably going to keep going. And that's why I take my trades the way I do, by using the crowd to tell me, to give me a hint at what is the strength of the trend. So I hope that this helps. I wish you very happy trading, and we'll see you in another video.